Good morning, everyone. Andy Tuttle here with the Tuttle Group at Fairway. Hope you're doing well. Just wanted to give you another edition of the DFW Mortgage Market Update. We do this every week just to help you know what is happening out there in the marketplace, how that affects interest rates, what are interest rates expected to do, and how that may affect you in how you structure your loan when you do get a contract. So this last week, it was pretty moderate as far as a news week, but we did have housing news on Monday and Tuesday. That was a little worse than expectations, but starts and permits were still up, so that's a good sign for the housing market going forward as far as a future predictor. Then we had the stock market really take a dive on Wednesday, I believe, with all of the leaks and the news coming from Capitol Hill, and that really shook the markets. The bonds were the beneficiary of that, and we'll talk about that in just a second. But then, as usual, the technicals end up taking over. In the latter part of the week, we saw the bonds hit some resistance, and that put them in a slight trading range. Good news is interest rates improved this week, but going into next week, it's a big housing week. There's going to be a lot of volatility, so we're going to be carefully floating if you haven't already locked in going into this weekend. But the good news for if you're out there shopping, that rates are better for most of you right now. So let's take a look at the charts. So remember, this is a price chart. Higher the price, the lower the rate. Since the middle of March, we've seen a steady climb in price with, of course, the normal roller coaster that goes on, but a steady climb, which means a steady overall improvement in interest rates. So if you got pre-approved really anytime in March, your rates are at least as good as, most likely better than them by 1/8 to 1/4%. So that's good for you out there when you're looking to shop for homes, especially if you're getting aggressive right now with a lot of competitive offers. This is the time to talk to your lender and make sure, if it's not us, talk to your lender and get an update on that rate so you know how aggressive you can get with that offer. If it's with us, definitely give us a call. If we haven't been we talk to you every week or call you every week, but if we haven't touched base recently and you're curious, just let us know. This last week, though, we saw a really nice up in the J curve, a nice spike in price. We had that start on the 16th. This is when the 17th is when the stock market, was down 330 basis points. Obviously, the stocks and bonds compete for the same investment dollar, so we saw that money go into bonds. But then it hit this technical ceiling here right below the 200-day moving average, which is a very hard ceiling to get past, or it's a very good solid floor of support if you're above it. So we're going to see this next week if we're going to be able to cross over this barrier. That'll be a big change, sea change for time to come in the next 30 to 60 days if that happens, and we'll keep you posted more on that next week. Good news for you, though, now we've since prices have improved here, we're in this tight trading range. We'll expect to be in that next week, and we'll keep you posted. So rates again are a little bit better than they were at the start of the week by about 1/8 and about 1/4% or more since the middle of March. So you're in good shape if you're out there shopping for a home. Stay the course. We know it's tough out there, but remember, it is worth it. The rates are in such a good spot, prices are in such a good spot. If you can stay with it and buy now, you're going to be in a much better position than buying next year. So if you have any questions, remember, we're here for you. Click the link below, go to our website, call us, reply, whatever you need to do, we are here for you. Have a great week. Happy hunting. We'll talk to you soon.